Hi traders, and welcome to the Technical Analysis Market Wrap on Friday the 14th of January. So I've seen some really nice moves at the start of this year. We've got off to a good start. A lot of the majors are starting to move in a nice direction, especially the US dollar-based pairs. They're starting to actually see a bit of weakness. The dollar index is seeing some weakness, which is pushing up the EURUSD and the Aussie USD and of course the Pound USD. So we'll jump straight into the charts and see if we can identify some good opportunities for the early part of January and see if we can get some forecasts for later into the year. So we've got the Aussie USD that we always start off with. We can see that we've had a really good start. Obviously, this week has been a really strong week. We're starting to push these highs here again at around the 73-cent mark. It has tested the 73 and sold off a little bit on the last day's candle. But as we can see, it's basically at a role reversal zone. I like to start the year out with no lines on the charts and then basically really draw them up from there so we can isolate what is potentially going to happen for the early part of the year and then maybe beyond, of course. So you can see here that obviously we've got a role reversal zone. We had support at this area here, resistance at this area here, resistance here again, and it's found itself stuck at that zone on this last attempt to break it. Now, what we want to be looking for here is a close obviously above this level, and if we get that, we'll be starting to look for pushes up to around that 74.50, 7500 again. And the 74.50 makes a lot of sense because it will coincide with this role reversal up at this level here, and obviously the 200 moving average will catch it as well. And we know that's a significant moving average on a daily chart every time it's touched it in recent times. So it's certainly something good to aim for. Look, the patterns that it's giving us probably tells us that there is a good chance that this will break, although this candle has sold off a little bit, as you can see. It wouldn't take a lot to probably consolidate under here and then break above it. And what we want to see is a good solid daily close above that 73. And then we start looking for the long opportunities on the smaller time frames up to the 200. So basically looking for lightning bolts, as we always do on the smaller time frames. And if we get even one on a 4 hour or 1 hour above this line after we get a daily close, I think we can start looking for that 74.50, which will coincide again with the 200. Look, failing that, if we still see the weakness from this level here and we get a lightning bolt to the downside, it would take probably a 4 hour downside lightning bolt though to convince me that it's going to go short from here, because it has been some very, very strong action. And although it is a role reversal zone, it is only a two-touch zone. So what I'd be looking for is a lightning bolt on the 4 hour to the downside. And if we get that, then we can start looking for the shorts back down to that 71.80 area, which you can see right through here. But in order to do that, of course, it's got to break the moving averages, both of them, the 20 and the 50. So it's got a lot of work to do actually to go down. And the MACD certainly moved up past the zero line now on the daily. So a pretty important time frame. All right, we'll move over to the US dollar CAD. Now we've seen quite a bit of weakness on this one. We are in the midst of basically a head and shoulders playing out, really. You can see that we've got the head right through here, the shoulder and shoulder, sloping down head and shoulder, which is generally, it bodes pretty ordinary for actually the long opportunity. So you want to be looking for you want to look for shorts. If it retests the neckline, the problem with this one is it's already gone. Like you can see, the neckline is this level here. Okay, and you can see that it's basically probably 80% of that distance. I mean, the take profit for this one would be around this level here, which coincides with the support. If we get a bit of a pullback and the lightning bolt happens and it continues on, we could probably trade it down to this level again, to around that 123.50 area. But just be mindful that it's no longer a head and shoulders at that point, because this head and shoulders pattern is just all but played out. It's nearly 80% of the way there. But in saying that, though, we are about to get a 2050 cross on the daily chart. So it's a significant cross. MACD is well and truly below zero now, so certainly needs to be respected. This was a golden head and shoulders opportunity because it was at a place where it was at previous very, very strong resistance. So the head was right at the resistance zone at around that 129.50, which makes for a perfect level to sell off from. And of course, it did the job, came down to the neckline. Then it hit the 20 again and down it came. So textbook head and shoulders, but again, it's already played out. So there's not much we can do about that, unfortunately. But that said, the 20 is quartered at the moment. If it rebounds up a little bit and we get a lightning bolt and it starts to short off again, even if it comes back and touches the 20 moving average, we can start to look for shorts down to that 123.50 area, which is a logical place for it to go now because it has got support at that level. So on the flip side though, if it does happen to start bouncing off the 20 or 200 moving average on the daily and starts to reverse and does a lightning bolt to the upside, then we can look at breaking the neckline down again, getting above the moving averages and pushing up into the 29 and 30 area, 130 and 129 areas. Now look, that's a longer term plan. It could certainly do it early in the year, but it's one of those ones where it has to prove itself. In the shorter term, it's got a lot of work to do to actually make that happen. It's got to break a lot of very key resistances now, including 2 main moving averages. So, the bias here really is down to the short. The 123.50 is the easier trade. But again, we let the price action dictate what we're going to do on that one. All right, we'll move over to the US dollar yen now. This one has been selling off as well, not to the same extent that the other ones have. The other dollar-based pairs have been a little bit uglier, but this one is definitely on a downward trajectory. This one finds itself on the 50 moving average though, on a daily chart, which we know has been significant in the past. It has been significant for a long time, of course, as you can see right through here in the early part of 21. Okay, it hasn't really broken down below the 50 moving average, basically for all of last year, as you can see, since it broke up above it. So it is a very key moving average for it. Of course, what we're looking for is a break well below this level. If it does look like it's going to continue to short and it breaks down below this support zone, I'll pop it in a horizontal line there to show you what I'm talking about. You can see that we've got very strong resistance through here. It was a little bit of resistance at this point here. This is the do or die time for it. Okay, so if we don't get the stabilization at this level at around that 114, if we can't hold up above this level and it gets down to around that mid 113s, we're going to be probably in a little bit of trouble on this one. I think that the last point of support's going to be around that 113, 112.80 area. If it breaks down through that, then yeah, it's looking down to that 111.80 area again. So a couple of key levels to watch for, but a few things have to happen, of course, and one of those is a key daily break below the level here, which is the support line that it's finding itself at now, and a very strong close below the 50 moving average. If it does that, there's potentially 150 pips on the downside to aim for. The other thing we need to look out for here, of course, is a lightning bolt and bounce off this support. So if it does that and finds itself starting to trend up on a smaller time frame, something like the 4 hour, probably a 4 hour would be the minimum on that one. That still is probably the easier trade in the sense that it's got a very easy target to aim for. In the first instance, of 115.50, and then of course we've got the 116.50 after that. So it's really a watch and see on this one. You want to be taking the trade where price action is actually pushing in that direction. I wouldn't want to be guessing because I think this could certainly go either way really, really comfortably. I couldn't have a real bias on this one because we do know that it's at very strong support. And there is no real easy path. The path down and the path up are probably equal in resistance and support on either side. So realistically, this is just one of those ones that you definitely want to watch the price action on. All right, we'll go to the dollar index now. Dollar index has been really, really weak. You can see that it's stabilized above the 20 moving average for a long, long time at the latter part of last year. But we've seen a very, very big decline in it now. The last week in particular has been very, very soft. You can see the 20 and the 50 moving average are bearing down on each other now, like the 20 is trying to cross the 50, and it may only be a matter of days from doing that. We know that the last cross that happened was way back down here at around that 90 level, so a very, very long time ago. As you can see, it's been very, very strong price action ever since. And it's fast approaching some key levels now. Look, if we get down past, this is the first level of support. If it's going to find support, it's going to be around that 94.50, which is not very far away. If it fails to hold up at that level and we get a close below there, then we're going to start targeting these areas here around that 93.20 again, which is a very, very strong zone for it. This is a difficult one because the moving average has just gone, the MACD has basically gone down to the negatives again. Tells us all the moving averages are starting to really falter. It's one of those ones where we've got to be really, really careful though, because it's not really quite at the support yet, but if it doesn't find support there, it could fall, and it could fall quite quickly. So it's a difficult one to long from this level, but in saying that, we're led by price action, right? So if we see price action start to kick up from this level and we go to a 4 hour time frame and we start seeing a series of higher highs and higher lows, then we'll look at potentially taking a couple of scalping shorts long. But longer term, it's certainly looking a little bit weak at the moment. There's no question about that. Very, very hard to make a case for it to go long. So unless price action indicates that it's going to, I think we look for the short and sharp moves up to the key moving averages and look for the longer term moves down to the 94.50 in the first instance, which is only not very far away. And if that level doesn't hold, we start aiming for that 93.30 area, which is a very, very strong level, and we'll probably take some breaking on the downside. All right, so we'll move on to the Euro USD now, which is obviously the inverse of that, and it's giving us an inverse pattern, of course. So you can see that we've got a pretty strong move up. We've broken out of this consolidation zone that lasted for a long, long time, basically all of November and December of last year, and we've seen a really, really big kick up this week. So again, the moving averages, I mean, it's basically mirroring what the dollar index is doing, just in reverse, of course, but you can see the same levels really, really at play. You can see here that the 115 is the next obvious target, and it's not very far away. Of course, it's only a handful of pips, about 30 or 40 pips away. So if it touches that, you're probably going to find that we're going to get a little bit of resistance there. I would expect that there would be anyway. So I wouldn't expect that would break anytime soon. I'd be maybe looking for shorting opportunities down to the moving averages from there. So potentially move up to there, then touch down and trade it down to the moving averages, and then kick on and try and basically long it back up to the 116.50 to 117 area, which will coincide with the dollar index falling to about 93.50. Okay, so very similar sort of moves. That's what we're expecting. MACD has just basically risen into the positive territory above zero now. It tells us that the 12 and the 26 are in the right direction of each other for a long move. So once we see a breakout like this, you know, quite often it's rare that it would reverse at an area with no resistance, and that's where it is right now. So shorter term, we could probably look for really short scalps back up to this level here, and then look for a reversal down to the moving averages, and then look for the big key push up to the 116. Look, failing that, it's got a lot of work to do on the downside. Of course, it needs to completely reverse what it's doing here, a change of trend, lightning bolt on a daily or a 4 hour, and it needs to get past these moving averages on the daily. Now you can see here, again, we haven't had a cross on the Euro daily since the 120 mark. Okay, so that's how significant a cross is. A couple more days of strength and we're probably going to see that cross. So it's hard to short it, but if it does do the lightning bolt on the way down and breaks past these moving averages, I could be convinced again that it may come down to the 112.50, but that's certainly not the easier trade. The easier trade is to trade in the direction of what it looks like it wants to do longer term, which is the move up. All right, we'll move on over to the US 500 now. Now, this was an interesting one over the holiday period. We had that Santa rally that we always seem to get, and it went to the level that we pretty much thought it would. It went up to that 4,800 level, and it was a bit of a sell fest really from there. It was always more than likely going to sell off pretty strongly from that point. So if you're able to catch that rally up prior to Christmas, that was awesome, because it happens a lot. When it broke this level here, it was always going to 4,800 really. It was never really going to stop. The retail money was going to push it up there. But as we suspected, though, prior to Christmas, it was going to have trouble breaking it, and it certainly did. It tried to hover there for the best part of a week, and then eventually started to sell off. So, look, this is still in the middle of nowhere for mine. It's very, very difficult to trade this one because it doesn't really show us any signs for the long or for the short. If you're looking for scalping opportunities, you could potentially look long it back into the previous highs, or for shorting opportunities. Yeah, for mine, it needs to get back to around the 4,500 to really show a significant ability to short. Other than that, it's going to float in a zone. So if you're scalping this one, what you're looking for is moves down to the 4,550 and 4,800. If you're trapping it between there and looking for smaller time frame changes of trend either way and aiming for those borders, I think you're going to end up with some pretty reasonable trades. But that's all it's going to be for mine. It's going to be just scalping in the short term. Longer term plan for the year on this one would need to be a break of the 4,800, and the significant break of that will potentially push it up to the 5,000. A lot of good judges are calling 5,000 by the end of the year. I guess we'll have to wait and see on that one. But if it does that, that's probably where it wants to go, because the price will just naturally gravitate to that very, very key zone. And of course, failing that, a 45.50 break of this level could see it really short down back into the 4,300s, down to this very key level down here. So yeah, in the interim, we're going to be just looking at scalping opportunities in between the two first zones, but longer term, a break of the 4,800 or a break of the 45.50 on the downside. We'll see this one do some long-term trending down to some very key levels later in probably the quarter or the year. But we'll wait and see. Again, we'll be guided by price on that one. All right, the last one we'll have a look at is the crude price, because this is the one that's been really moving. We can see that we've got a very, very good price action, lightning bolt happening right on the daily. You can see that we've basically pushed up to the 82 again. It hasn't quite reached the previous highs of last year. You can see there that we did get up to nearly 86 on it. It's not very far away, and it's certainly trending in a direction very, very strongly. You can see the lightning bolts right through on a daily. Very, very strong price movement. We've got the moving average crossover, of course. This wasn't all that long ago that it did that, and it did short off quite significantly. But, it's a positive sign for it. MACD is positive. Stochastic is positive. Everything is looking very, very bullish for basically the spot crude price, looking like it wants to go back to 85. But it's one of those ones where if you're not already on board, it can be a little bit difficult to get into. I'd be waiting maybe for a bit of a pullback. Ideally, I'd like to see it pull back to the 20 moving average, let it catch up a little bit. A 20 moving average pullback would be great before it reaches there, because I think it gives us something to aim for then. But failing that, take the smaller time frames, look for the opportunities to get up there. It's going to find resistance there, no question. If it breaks through there, then it's going to try to get to the 90, but it's got a lot of work to do to break this level. It tried several times, couldn't do it, but it has had a very, very big run moving up. So probably looking for a small move up to there, but any reversal pattern would be me shorting it down to the probably 78 again. So if we're looking for a change of trend on the downside, we get a lightning bolt on a 4-hour or even a daily. It's a long way away, but if it happens, we're going to be looking for a 78 move or a 77 move back down to the key moving averages, and then let it sort itself out from there. We know around the 77 is a very, very key zone. We'll pop a horizontal line there, so we'll keep an eye on it. That's the level I'm talking about. We've got very strong resistance there. It was support. It was resistance again when it broke through. This is the level that we're looking for. If it does pull back, I'll draw the above line as well, so we know exactly what we're aiming for here. Okay, they're the two zones that we're looking for it to hover in. So trade in between these two zones until we get a key break above either or below the 76. And then we'll look for a longer term trend on that one. But for now, just trade inside this channel, and we should be right for the short term. So glad to be back, everyone. Thanks for joining us for the Friday wrap. Look forward to seeing you all next Friday, and have a great weekend.